Welcome to the Crypto Simulation. I'm the Gaussian Snake, and tonight I'm going to talk to you about Bitcoin, what to expect next. Please join my Telegram group at the Snake Pit and get a free portfolio management tool that I created myself and used last year to help DCA altcoins and other cryptos. During the month of March, I'll be giving this away for free inside of there, so join me there with 168 other members. So what we're looking at here is a logarithmic regression channel for Bitcoin on the weekly, and this is something I've talked about in previous videos, so be sure to check that out, and you can see kind of how we've been tracking this for a little while now. Bitcoin did slice through the 0.5 log regression line. For those of you who are new to my channel, this is a logarithmic regression band, and this is the logarithmic regression mean line, which is where price spends most of its time, and each of these bands is plus 0.5 standard deviation to the upside and to the downside away from the mean. And you can see my prediction has been that we would not get this high as we did in the 2021 cycle, that the highest we could get is probably to the +1. Well, we did get past the 0.5, but we found some resistance in between the 0.5 and the 1.0, somewhere around 0.6. And now we're back testing the 0.5. And if I had to guess, I think that this back test will ultimately fail to the downside and will put in a higher low. I don't think we are really going to head too much lower than this region in here. So I'm looking for somewhere between 45 and 50K to kind of mark perhaps a low that we can kind of, find a base for and grind our way up over the next few months. So what do I think is going to happen? How high do I think Bitcoin can go from there? That's what we're going to explore. But you can see that these log regression lines, if you go back in Bitcoin's history, they tend to get pretty respected. And interestingly enough, we hit the 0.5 log regression line, actually got even higher in 2019, which was a bounce from 2018, just to show you the effects of diminishing returns. You can really see the diminishing returns play out on a logarithmic regression chart like this one. We should also note that on the universal logarithmic regression lines, these are Fibonacci logarithmic regression lines, we wicked up almost to the 0.7639 fib before getting rejected. So the 0.618 would be, if we came down to retest that, where we did get rejected back in January, and it was actually where we, in our bear market, kind of right before that nasty capitulation that we had in June of 2022, if we do come back down to that, that is the price of that is around $52,000 to $53,000. So, that could be another target looking at these bands. On our logarithmic trend channel, we can see that we went up to 2 standard deviations above the mean. This is the mean line in increments of 0.2 up to +3 and -3. We went to the top channel or the +2 in November of 2013, and then again, we went about 2.5 bands lower in December of 2017. And then we went quite a bit lower once we got to 2021. You're talking almost a full band lower. And now here we are almost a full band low, actually more than a band lower with our first presumptive intermediate cycle peak. It could be a major cycle peak, but the odds are it isn't. ETH hasn't run, altcoins haven't truly run yet. So I'm kind of assuming this cycle is not over. But you can see that we are just barely above the -1 logarithmic regression trend line. So we're likely to head down a little bit, maybe to the -1.2 or something like that, but you can kind of see how this, diminished returns plays out every single time. Something else to notice too is that once we hit this first peak, and I put the other log channel on along with this, once we hit the first peak in April of 2021, the next peak we hit in November was lower. Not only was it lower on the blue log channel, but it was also lower on the gray one. So we have to keep that in mind as this cycle progresses, that this first top is probably going to be as high as it gets on this logarithmic trend channel. So a lot of people might think that it could get up to here, to this line, the +1. And you might be right if this parabolic move isn't done yet. Which I personally think that it is, but I could be wrong, and that would actually concern me if we did go up a little too much more, considering how hot the indicators have gotten. But I'm thinking in the future, that when we hit another top, presumptively, it'll probably be on this 0.5 log line. So let's try to like estimate out when that might be. So if we study our last top, we can see that where the blue met the gray, we dropped about one full gray line, so about 0.2 standard deviations on the linear log channel, and that, we tapped the bottom of the 0.1, 0.5 blue log channel line. So again, we lost a full channel of 0.2 standard deviation on this long-term one. So what if that happened again? Something kind of similar. Let's suppose that we kind of come down here. We don't get all the way down to the median line, but maybe we crab around in the 45 to 55 range and just kind of build a base higher. And then maybe in the summer or later in the year, it's hard to say exactly when, let's just say like September 2024, that would correspond to a $72,000 top. If we were to, come up here, maybe a little more than, be like 75,000, could be like a double top. But what if we extended this out to December of 2024? That would actually put a higher high around 77 to maybe 80,000. Now, it is perfectly possible that we could extend this up here. Let's see if there's ever been an instance in the past history where we have successfully, gone higher on our next move up, assuming that this is a local top. Has it ever happened? I mean, we can see from 2017 to 2019, that of course this was a bounce out of the bear market, but still a bull market, even if it was a weaker one. We went way down. Let's look at the 2013. So here's an instance where it did happen. Okay, but you have to remember this was early on in Bitcoin's history, where it kind of made sense for us to get higher and higher until we got like all the way up here. We had quite a bit of momentum. I mean, this is very parabolic. This is very parabolic, and you can even see that the parabolicness gets less steep and less steep every single time. Very steep, right? Less steep. Okay, even less steep, less steep. And look at how like this isn't even steep at all. So, I mean, it is possible we crab around maybe higher and then shoot up to this line. That's, and that would still be a lower top than here. But the drops have been pretty precipitous on the gray channels, right? You come down quite a bit to the next one. So conservatively speaking, and I know this is not what most people want to hear, but let's just say that we failed to achieve that getting higher on the gray band, and the blue intersects this gray here. Let's just say maybe let's look at some different scenarios. So if it were August to September of 2024, we'd expect a lower high of around 70 to 71K. If we, it could be a little bit above that, of course, but that's generally what we'd be expecting. If it's in December of 2024, we're expecting a high like around 80K. And if we went all the way into, let's say, March of 2025, we would expect a high somewhere around 85K. And if by some a miracle or something we make it out even further into 2025, let's just see if we can stretch this out a little bit more. And I'm trying to keep this parallel, relatively speaking. Let's just say somehow we make it all the way out to, like August of 2025 or something, then we're talking 95K. So yeah, I mean, we'll have to see how this correction plays out, but I'm anticipating we'll have a drop somewhere into the 50K range, crab around and work our way on up. I don't know if it's going to take the rest of the year and we hit our top in December, or we even go into next year. It's really hard to say. It's hard to predict that. A lot of the indicators are pointing towards a top in like August, September, but I'm not going to take those to the bank, right? So whether our top is like, kind of like a double top, maybe with a slightly higher high, or it's a much higher high, or this is part of a parabolic leg that takes us even higher up here. I can't know that just from looking at these charts alone, but history would suggest that it would be reasonable to think that we would fall down a couple of these log bands, at least one, right? So like August, for instance, we'd fall down one, and that would put us at a lower high of like 70K. So, we have to prepare ourselves for anything to happen. And it might not seem like 74K or 73K was that significant of a top, but it is 5x more or less off of the bottom that we just encountered. So whether we see a slightly higher high or even a lower high remains to be seen. And part of the reason why I feel like we're less likely to actually put in a much higher high, and we could even put in a lower high later in the cycle, has to do with this indicator called the parabolic SAR. And this gives you the magnitude of parabolicness that your moves make. If we go back to 2010, you can look at these blue dots and see that we were almost straight up. You can ignore the down one. And then you go to the next leg, which took us into December of 2013, look at that drastic difference in parabolicness. Compare the rate of change of this trend to the rate of change of this. And then if you scroll forward to 2017, it almost looks flat, right? It just keeps flattening out. And then you go to 2020, it's even flatter, right? And you go to right now, it's even flatter. So what's happening? Well, what's happening is you're getting diminishing returns. And this shows up that in the parabolicness, this is a very wide parabola compared to what we've seen before. So, maybe we see a little down move here, and even the down moves are less dramatic too, which is the good news. Let's look at the down moves, okay? And you can see how they become less dramatic over time. Really steep parabola down, okay? This one looks almost like a straight line. A less steep parabola down, okay? Compare these. These look kind of similar, I'll be honest with you. This down move and this down move don't look that different. You have this down move, but it was definitely took less time, right, to get to the bottom. And then this down move kind of looks a little flatter, okay, but less steep than that one. And so, and look at these little down moves in the bull market compared to past bull markets where they would be a little bit more extended. So our correction, in the grand scheme of things, might not be that dramatic, and then at the same time we might not get much of a leg up. Like 78k at the end of the year, or 80k could be our bull market cycle top for all we know. Maybe we grind up from the 45 to 50k region. That's a possibility to consider. Now, of course, the longer the bull cycle goes, the higher the top will likely be via log regression. We could get very close to 100k if the cycle extends out into 2025, which is not my base case. My base case has been for the cycle to end somewhere between September and December of this year, possibly as early as late August. But that is subject to change. And let me just remind you why I think that. So I feel like the top that we just hit was here we have our top in March. But if you look at our Snabble RSI on the 2 week, this is like it's around March 11th. We hit a pretty high level. Almost at 100 on the Snabble RSI. This is an exponential RSI, and you can see the clear uptrend if I were to draw it. Let me find that tool. Yeah, if you were to just draw like a line, kind of straight up here. So I kind of expect this to be a bit of a turning point for us, where we now start to head down, back down the channel towards oversold. Now, this will not happen monotonically. There will be bounces along the way, and I think a substantial bounce along the way could take us to a new all-time high. We are already starting to trend down right now. But what is so significant about this level we hit in March? Well, this is also a level that we hit in January of 2021. And notice how the RSI kind of bumps its way down. Here's February, March. And so the bullish structure of the market is now starting to fade. This is all bullishness, but now it's starting to fade. 2019, we didn't make it quite that high, but we did in December of 2017. So we're at an RSI level that we don't hit very often. We hit this in December of 2017. Before that, we hit it in November of 2013, March of 2013. It was easier to do that back here when Bitcoin was a more nascent asset. As you go further along, these times are very rare. So, January 2021. So I expect to see more moves up, and we get these dead cat bounces in the RSI, and sometimes these can be quite significant. Like here's a summer lull, we just crashed through the floor here, and then just bounce back up, and this like literally takes us pretty close to June 2022. This is like only 5 months away, really, from our market cycle low. We had some relief rallies, but ultimately these are where we put in our ultimate cycle low, was down here. So, the most dramatic drops are going to happen when you have the biggest moves with RSI. So RSI is moving down pretty fast right now. When it moves down like this, this was in 2017, it can really move down, right? And it got all the way down to 39 or something here. That was the end of the cycle. This move from September of 2023 to December of 2023 was insane. That was just a very, very bullish move. It kind of reminds me of what happened in 2019, a similar kind of move. So when things get moving, they can move fast. So what I'm anticipating, and there's really no way to know this now, keep this in mind, this is on a 2-week time frame as well, that we'll see some kind of bounces along the way. And those bounces, they can last for a while. These are 2-week time periods, right? And I don't think we'll get back up to this orange trend line again. It took us 3 years to get to it, 4 years previously. So I'm guessing for another 3 to 4 years at least, so out in like 2028 or something like that, maybe we would get up to this trend line again, 2027 at the earliest. So sometime around then, like, late 27, early 28. So we're kind of heading back down, and at some point you start your bear market. And where does that occur? We can look to the past, and you can see when we cross the 55 line, and especially when we start getting lower and lower. Anything below 50 is generally, that you're kind of in bearish territory. Anything above 50, you're in bullish territory. We're still close to 80, so we're still very much in bullish territory, and it's rare for this to just go straight down. So we will get a bounce at some point. We could see a bounce right now, or maybe we'll see it in a few weeks. The bounce in 2021 was very choppy. So I don't think our bull market ends until we're in this region. And how long is it going to take us to get into that region? This is kind of why I'm eyeing the August to September timeframe, but it could take as long as December. But this is also why I think it's quite unlikely, unless Bitcoin does something completely different this time around, that we make it like really far out into 2025. I think the market cycle will be over by then. It will be in a bear market, if I had to guess. So this shows overbought and oversold regions. This is the MFI oscillator volume profile. And you can see that this kind of gets less volatile over time, which has to do with diminishing volatility. The level that we hit recently, and again, March 11th, that 8602 is not one we've encountered often in Bitcoin's history. We were on the way up to it in December of 2020, maxed out in January of 2021, and on our way down, actually, it was these bounces that was putting in highs for us. So again, even if we do come down from here and start to head back into the oversold region, it doesn't mean that we won't see higher prices. They just won't be as dramatic in terms of ROI from where we start. See, the idea is to maximize your ROI. If you got into Bitcoin at 15,500 and you exited at 73K, you've maximized your ROI. Will Bitcoin go higher than 73K? It could, but let's say you get back in, let's just pretend that Bitcoin drops to 45K or 50K and then goes up to like 80K or 75K or something like that. That's not really much of a return compared to getting in at 15.5. May of 17 was another significant time, and we saw a pretty large W-shaped double bottom drawdown, and then we put in a lower high in December 17, but the high in May 17 was actually more significant from a money flow point of view. So, it seems like every time you get a trip up, you get another, attempt up, and it was very choppy here. In 2017, it was a very clean, it's like if you come down really fast, you get a lot of momentum to bounce. Look at this bounce here, corresponded to our double top. Not very high, right? Not that impressive in terms of money flow compared to, 2017. And then in 2013, we actually did revisit this line, but still put in a lower high. Okay, so what we see here are once you hit this line and you pass through it, the next time you put in a lower high, and in some cases it could be a substantially lower high, just barely above 50 here before we plunged into the depths of our bear market, which, and we can see that the bottom was actually over here on the way back up. So that's just something I wanted to point out. And we also don't spend a lot of time down here at these levels either. Underneath 30, it's very rare. So we want to look at those when we're on our way back down in a more material way. Now, this is my 2-week beam profit-taking risk metric and also DCA risk metric. And you can see on the 2-week, we don't get above this orange line, very often. Like, what I mean by that is by heading into that oversold region. So anything above 0.65, I've defined as oversold. And that's just my definition. You can see in 2013, we entered it. We could arguably entered it in February, had our April top, came down, stayed in this region for quite some time, peaked out above the red line, in November and started to make our way down into the depths of the bear market. In 2017, we got above this in April. Market cycle was over in December. So we were already at 0.65 risk. We went actually over 1.0 risk. This is what a blow off top looks like. We didn't get a blow off top in 2021, but we actually hit maximum upside risk around March of 2021. Then we had to spike up in April, and we had this lull where even in July, all the way out, really until April of 2022, we were still technically in this oversold region, and then we plunged into a lower region. So we have now entered into, as of I think it was February, we entered into the oversold region. And we tend to spend quite a bit of time in this region, and that's something that you might want to pay attention to. So let's see if we can do a little bit of a date range. So from beginning to end of the last cycle, it was 560 days in the oversold region. And this does include your entry into the bear market. Let's keep that in mind. On the risk metric, you probably don't want to wait till you're on your way back down to start scaling out. So this risk metric is already saying, hey, it's a good idea for you to be scaling out of Bitcoin at the prices that we were at. So in 2017, it took us approximately 476 days from start to finish. And this, of course, does include the bear market. So keep that in mind. And in 2013, we had a lot of choppiness, about 518 days. So, and yeah, I mean, this corresponds to, April, May of 2022, our bear market was like halfway over. Right here, July of 2018, our bear market was like, about halfway over, not quite. And so if you take half that time, you can kind of get an idea of when the bull peak might be. So if we look at like 200 and what's half of 560, 280, right? I was going to pull my calculator out. So 280 days, it's like July of 2021. That's not quite right. We weren't out of our bull market by then. Let's go a little further out to like November. Okay, so that was 392 days, and from entry to exit, where we would have maximum profits. I mean, you can make profits on your way down, of course. You just don't want to get too far down. December, 2017, 238 days from entry, and over here, let's say it's about 294 days. So 294, let's do an average of these three. So 294 plus 238 plus 392 divided by 3 is 308 days. Let's see where 308 days puts us in the grand scheme of things. So entered in here, 308 days would be sort of like an average. And that would put us in December of 2024. Wow. Look at that. That's about within my prediction window for a top. And maybe this top could come in somewhere in here. If it happened in December, maybe it would come in at a risk level of about 0.86 on the 2 week. And you can see that it can get very choppy between now and then. We don't know exactly how this is going to evolve. We don't know how far down we're going to come, but generally once you get above this orange line, you stay above it. That's what we did every single cycle. So why should this time be different? Maybe we won't stay above it this time because of diminishing returns, but I'm going to say we do until proven otherwise. So, we're well on our way into the heated part of the bull market, where we start to kind of think about some exciting things happening. So if this ends up being kind of a prediction, then this puts our end of our bull market about 9 months out in December. So we'd still have quite a ways to go before we achieve our next market cycle peak. So there could be a lot of crabbing from Bitcoin between now and then. This is the ADX and DI on the 2 week, which has actually done a pretty good job of timing market cycle peaks. You can see that the green directional index peaked out in January of 2021, which is 3 months before the first cycle peak. When it peaked out again in November, look how puny that was. And look how weak the trend strength was. we had maximum trend strength, actually, believe it or not, in looks like April. Yeah. So we had maximum trend strength in April, and that coincided with the first major top. And we just had like a dead cat bounce on trend strength that hadn't even really played out, honestly. This wasn't even bouncing yet. It had just bottomed out at around 20, which is still a fairly strong trend, but nothing compared to a trend strength of close to 80. And that's where we saw our November 2021 top. I'm going to ignore 2019 for a second, although maybe I shouldn't ignore it, but I'm going to. You can see that our trend strength peaked out in 2017, mid-2017, June of 2017. What was going on at that time? Bitcoin had not yet put in its all-time high, but it did put in a significant high. Around, looks like May of 2017. So 1 month later, we had peak trend strength. And your trend strength could be peaking when you're going up or down. It doesn't really matter. But you can see that we maintained overall bullish structure, right, until 2017. And by that time, the trend strength was actually coming down. And then it just dropped off the map of the face of the earth. And that's probably why we got this 2019 bounce. It's because of how fast this came down. We always get a bounce. This bounce was really strong. But price action can remain very strong because this is your trend strength. So as you get these spikes in green DI, that price increase can be pretty dramatic. Going back to 2013, we actually had the green DI really go absolutely ballistic in April. The maximum trend strength was in June, and then we had another bounce in trend strength that you can barely even perceive here in November of 2013. It looks like a little kink. And then a more substantial trend strength bounce when we're actually heading into our bear market. That's not really what you want to see. July of 2011, we had maximum trend strength. Again, the green DI peak. So the green DI tends to peak out before trend strength does. And you can actually see the green DI also looks like it's putting in a series of lower highs. So this could be the peak DI here in February 20, or I'm sorry. Actually this looks like it peaked in February 2024. Even though we kind of came down a little bit, and that was enough momentum to push us into our March cycle top. Okay, but the bulk of the bullish move was in February. And we can see our trend strength right now is at like 44. So I hypothesize that we'll see the trend strength continue to trend up. And maybe it peaks out. It seems like, these peak out shortly after the all-time high is hit. So it could peak out in May and then start to come down after that. I'm not using the path drawing tool because sometimes I forget to double click it. And, so we could kind of come down as we enter into our bear market, kind of get ready for that next bear market whenever that comes. I don't know how this is going to play out. It's obviously not going to go straight down in a line, but generally speaking, it could do something like this heading into the end of the year. Now, if that happened, we could see a second top anytime on the way down, right? So I think Bitcoin might start crabbing as we head into May. And then as we come down, maybe we see some spikes that correspond to positive Bitcoin action. And then somewhere in this region, we could actually see the second major cycle peak, which is actually on the way down heading into your bear market. And you'll see the green DI also starting to kind of come down as well. We don't know if that's what's going to happen. I mean, it did happen in January 2021. We never achieved a green DI this high. In 2016, we just got higher and higher and higher, and then fell off the face of the earth. So I suspect this might be it in terms of the top, like of the DI hitting a major green DI in February 2024. And then maybe it starts to come down and it kinks a little bit on the way down. I don't know exactly how it's going to work, but every time it kinks upward, and you may not even see that in the 2 week because it could be for a short time period, you'll see Bitcoin price start to go up instead of down in a more meaningful way. So again, I'm not thinking our major cycle top is in terms of price, but I am thinking that our major cycle peak is in terms of ROI from cycle bottom, return of investment from cycle bottom for Bitcoin. Now, something that does kind of make me wonder a little bit about what might happen is the pi cycle top indicator, which has triggered every major cycle top. It didn't trigger the November one, but it will trigger basically what it believes to be a cycle top. This happened right on cue in December of 2017, and that did mark the cycle top. And you have the interplay of, I think, the 111 moving day average with the 365 day moving average. 350 day moving average, simple moving average, which is in green. So the green SMA is the 350, the orange is the 111. And when the 111 crosses above the 350, that's generally when you expect to see your pi cycle top trigger. And so it triggered in April. It did not trigger in November. Why is that? Logarithmic regression. This was more of a dead cat bounce. Even though we had a more significant price top, we did not have a more significant ROI. And what do I mean by that? Let me show you. Let me get the ruler out. So in terms of like ROI, that was maximized right here. So from the COVID, actually, we don't even want to take it from the COVID lows. Let's take it from the 2018 lows. So from the 2018 lows to this pi cycle top, you were looking at about an 18x, roughly, and maybe a little more than that. This doesn't look like it quite went up as high as it should have gone. Let's just call it like an 18x. And I know that number is not exactly accurate, but it's close enough. And then like when you were going from the summer lull, sorry, that is not where I wanted it to be. Let's try this again. Let's get down here. Yeah, for some reason it's not cooperating with me. I don't know why, but let's just say it was like, really it was more of, we got down like 29K, so it was like a little over a 2x. I don't know, for some reason the ruler isn't giving me the correct information, even though I placed it down here to start. So we'll say about a 2x, 29K to 69K, just a little over a 2x. So the point I'm trying to make is you're trying to compare like a 18x move off the bottom to this top versus like a 2 point something x to this top. And so if you look at this cycle, if you take the bottom back in November, December timeframe, we have put in basically, this is also not entirely accurate. I don't know why this is giving me weird information, but that's actually, it's like 15.5K to 73K is more than a 4x move. So I don't know, this measured move thing is kind of weird right now. We'll say about a 4x. My point is, like, if we come back down, let's say, and then put in like a slightly higher high, we might only do like a 1x or something like that. So the most significant price top, ROI top, in my opinion, is already in, whereas the price top might not be in. In fact, I think there's a chance it isn't. We could put in a higher high, or we could put in a lower high. I don't know, but I do think we'll have another trip up at some point. Now this is the rate of change indicator for Bitcoin, and you can see that this thing went absolutely crazy in December of 2017, getting up to like over 236. But this rate of change diminishes with diminishing returns. So in the 2021 cycle, our rate of change went down quite a bit. It went down by a factor of more than a half. And then if you have to think that happened again, look at, this is like a reasonable area to top out somewhere in here. So like around 75. You're just seeing this asset start to have less and less ROI as time goes on. It becomes a safer asset because it will have less downside ROI. But this is why you're going to see a lot of people start pouring their money into altcoins and Ethereum, because those haven't experienced full runs yet. Those haven't experienced their full ROIs off the bottom necessarily. Maybe some have, but I think most probably have not. And Ethereum, I would doubt, has by now. Although Ethereum has experienced some significant upside, I think it still has a lot more room to run in terms of ROI than Bitcoin does. One last observation I wanted to make. This is the weighted logarithmic Bollinger Bands on the 2-week. And you can see that every time we have parabolically rode the upper channel, like right here, we did it starting in April 2011, and then we got our first red candle in June of 2011. This only lasted 2 months. We entered into a correction. Now, this was a pretty substantial correction, but then we rocketed back off into 2013, and we started riding the channel in January of 2013, stopped riding it 3 months later in April, took an intermission, chopped around. And this is something like what I think could happen this cycle, but in a much less dramatic kind of way, where we chop around for a while. And if we chop around long enough, maybe our cycle does get to extend out till December or January. And then we entered the channel again in September of 2013, topped out 2 months later. Okay, so now this one's an interesting cycle because we have these little moments where we were doing the channel riding. So it looks like April of 2017 to about May of 2017 or June of 2017, so a 2-month window, and then we had a correction, bounced around, consolidated, and then we had one final run. Starting in November of 2017, rode the top of the channel for a month before experiencing a much more substantial correction. And then we did it again in 2019. We had a run up for about a month, came down again. 2021, October 2020, we entered into the channel. By January of 2021, we have completed the channel hugging, and then we started to round our way over to drop. And that was really it. I mean, I wouldn't even consider this riding the channel. And so this happened again recently, where we rode the channel from about, and we have to really zoom in to see this because it's so diminished compared to what it used to be in the past. You know, we started riding the channel, it looks like maybe in February, topped out in March, and now we're coming down again. You can argue we rode the channel a little here, but I don't really count that. So could this happen one more time later in the year? Sure, it could. Could Bitcoin do kind of what it did in 2013? Sure, it could. I think that's kind of a likely scenario, but you know, where we're just going to chop. Bitcoin's going to get choppy. Diminished downside means it probably won't go down as far as people think, but diminished upside means it probably won't also go up as far as people think. And I'm not sure Bitcoin is going to exceed 100K this cycle. I am still kind of thinking it won't, you know, and that's just based on my own data analysis. But I'd be interested to know what you think. So if you disagree with me, please leave a comment. You know, we can discuss it some more. So in conclusion, let's summarize. Bitcoin appears to have achieved maximum return of investment, or ROI, from the cycle bottom in 2022 for the 2023 to 2024 bull cycle. I believe that our 73 whatever, I forget the exact price, but let's just say under 74K top was the major cycle top in terms of ROI. However, I do think that we could see a higher price top later on in the year. Macro bullish structure of the market is beginning to erode slowly, which may materialize in the form of corrections and diminished upside potential. So this doesn't mean that the price won't go up. It just means that maximum bullishness, maximum bullish momentum is no longer present. And you see this with the Snabble RSI starting to kind of fade off. And you're seeing the beginning, the very, very beginnings of bearishness start to enter into the market. And it will not be obvious at all until much later this year that that is coming into play. I anticipate a major cycle top for Bitcoin between 75 to 85K occurring sometime between late August of this year to maybe December or January at the very latest, before Bitcoin decisively enters into a longer term bear market. Now, any of this data is subject to change. You know, this is just my interpretation of it. You are welcome to do your own interpretation and share your thoughts with me in my Telegram group or here on YouTube, whatever you're most comfortable with. So please join my Telegram at the Snake Pit for continued discussion. The latest alpha, we have about close to 170 people in there, and we've only been doing this for a little over a month. And you'll also get a free copy of my portfolio management tool. I actually just posted that right before I made this video, so you can check that out there. It's in my alerts channel, which you will see once you get inside of my main Telegram. Also, please be sure to like, comment, subscribe, and ring the notification bell so that you can get the latest updates as soon as they are released. And I just want to thank you for joining me in the crypto simulation today. Nothing that I went over was intended to be financial advice. Any price predictions are purely for entertainment purposes only. And I wish you a safe rest of your week, and I'll see you again in the crypto simulation soon.